All right, how's everyone doing? This is Hala Pablo. Thank you for tuning in. Let's continue on with our Bitcoin updates. So Bitcoin has retraced a little bit. It's gone back to 90, and this should be of no surprise to us if you've been following this channel. Indeed, we see the fractals playing out very faithfully. The 2026 overwriting 2022 for now. We're not going to try to get ahead of ourselves too much because, as you know, fractals can throw a surprise every now and then and not go the way we anticipate. But for the most part, on the macro, we see the replications playing out very clearly. So with this video, I just want to emphasize, I want to kind of elaborate on a theme from yesterday's video about the contrast between smart money and dumb money. And then here again, I have the same charts. I have the fractals on the macro. I think those are on the daily, right? And then I have the CVDD, which stands for cumulative value days destroyed, on the bottom here. And you see the similarities also in the price structure. Well, it's not really price. This doesn't track price. This tracks positions. When smart money or institutional investors purchase Bitcoin, or whales purchase Bitcoin, they hodl them, and it begins to accumulate time. Now these charts, this indicator here, the CVDD, tracks these hodled positions, and every time a position is either liquidated or transferred from an active wallet to an exchange or vice versa, the day or the time accumulated from the hodled position starts over again. It's reset. So the longer something is hodled, the higher the waves go. And so when we start to see waves on a decline, like we see here, we know that smart money or institutional investors are slowly exiting their positions. They're shifting Bitcoin from their wallets or cold storage onto exchanges or somewhere where they can offload. And so that's what this signifies. And we see over the macro, we see the waves on a decline. Now we have at the same time the actual price action chart, we see rising highs. So what's that all about? Well, that's a divergence, right? So the rising highs, even though price is going up, smart money is shorting the markets, or they're exiting their positions, and the transference of Bitcoin, of liquidity from cold to hot, denotes a divergence. There's basically a contrast. So if the price is rising while Bitcoin is being unloaded, what's going on? Well, clearly retail, or let's just say dumb money, is buying. What are they buying? Well, they're buying the supply that's being offloaded by smart money. And why is smart money offloading supply? Well, smart money is offloading supply because they've seen the writings on the wall, and it's time for the cycle to continue on naturally to the next part, in keeping with the fractal macro cycles. And so they're getting out, they're getting in, and this is what makes the game go on and on and on. And we see the price cycles, and that's what prints out these patterns, these similar patterns. We see these subcycle tops here. They're kind of similar, right? They're not exactly the same, but they're similar, and we see that all throughout. And that's why we have different structures like rising wedges and falling wedges, and ascending triangles and descending triangles, and the head and shoulders and inverted head and shoulders, and parallel channels, and all of it taking place more or less within the same proximity of moving averages and anchored VWAP lines, volume weighted average price. It all just kind of intertwines together and works. There's a beautiful symmetry with it all that is discernible in fractal form, just like the different seasons of the year, from year to year to year, and just like the different stages of the moon, the waxing and the waning of the moon, and the low and the high tides, all of these have patterns. The sunsets, the orbits of the planets, all of that is traceable and predictable to various degrees. Some of it exactly, we know exactly what time the sun is going to rise tomorrow, you know, and we know when it's going to set. And, you know, how do we know these things? Well, there's a system in place, there's laws in place, there's a governance in place that is almost mathematical, right? Indeed, that's where the great mathematicians have shown in the past, like Newton and them, laws of planetary motion. Well, there's laws in the price actions too. There's laws in the financial cycles, in the bull and the bear cycles. There's an overarching governance, and Wyckoff and volume spread analysis endeavors to kind of take advantage of that and make it as much of a science as possible, which is what my technical analysis endeavors to convey. So if you're not subscribed to this channel, go ahead and subscribe. I think the charts speak for themselves. Indeed, the fractals speak for themselves. And so we see these similar repeating patterns. Now we notice that in 2022, now again, the cycles are traceable. 4 years, every 4 years, they seem to repeat to various degrees. And what is that? What is that because of? What causes these repetitions or these replications? And it's basically human, the psychology of human behavior when it comes to supply and demand. That's all it is, really. It's predictable. And so that's what prints the tops and the bottoms, the distributions and the accumulations, and we get similar structures. I mean, look at this. It's undeniable. We have this, you know, we have this Wyckoff distribution. Here's the Wyckoff distribution, the sister fractal 4 years later. Whereas here we had more of a classic, we had a 3 drive and an LPSY. Here we kind of had more of a diamond kind of shape, where we had a discernible buying climax with the UTAD here. Here was the bull trap that came down, redistributed down into the pocket. Same here, 4 years prior, down into the pocket with the terminal shakeout bouncing off the 400, terminal shakeout bouncing off the 400. Here we had the micro trend support, and then we came up here to this preliminary supply, or this area, this next shoulder of this subcycle B. Same thing with the shoulder here, but the sign of weakness came down beneath into the pocket, whereas here it stayed above the 200 simple moving average. And then we had the head, and the head. Here we had a classic double top here for the buying climax number 2, and here we had more again of a classic. You see how it's kind of inverted? Here we had the double top, whereas here we had the double top. Here we had the classic Wyckoff distribution. Here we have the classic Wyckoff distribution, the head and shoulders, you know, the textbook head and shoulders, basically inverted these fractals, but nonetheless the fractals are playing out. And so here we had the buying climax, automatic rally, secondary test, and then sign of weakness area, and then the UTAD, which I marked as UTAD number 2, then the series of LPSYs, whereas here we just had the buying climax, and then it was very short, and then we had the UTAD and the LPSY. What's important is that this second LPSY, the second subcycle B, retraced through the iron dome, and then the moving averages begin to print red. Why? Because the price is transgressed. Price has gone through and closed. Not only has it gone through, here it almost did, and here it almost did, but here it actually did. And you know from our other videos, we traced Bitcoin all the way back to 2011, and we've seen that until now, Bitcoin versus the Iron Dome is 0-5. Bitcoin has never beaten the Iron Dome. It's never come back up over the Iron Dome after coming down after a subcycle all-time high, until it touches or it makes rendezvous with the 200 weekly moving average, which is done here 4 years ago. And we trace it back to 2018. It did the same thing. I don't want to do it because I have to adjust the chart and all that, and that takes time. But we have a video where we've gone back. We did the 2018, we did the 2014, and every time we've gone through the Iron Dome, Bitcoin has at least touched, sometimes it's gone through, here it went through deeply, the 200 weekly before it was able to come back up. And this was the bottom, absolute bottom, which I call ground zero. And then it came back up through the dome, and the moving averages, the 200 and the 400, went back to default white, and then we entered into the next macro bull run. Okay, so but every time it's gone under, it's not come back up until it's touched the 200 weekly. And so what does that mean for us? Well, it means that we may be embarking upon a similar situation to what we saw in 2022 and in 2018 and in 2014 and in 2011, that we're going to have attempts at the Iron Dome, but ultimately Bitcoin will not prevail through it and have a subsequent rejection and markdown to the 200 weekly. Currently, the 200 weekly is at 57.8. I anticipate that by the time we get the actual Iron Cross, which is the confirmation of the redistribution, this is the key redistribution. After this, if it fails to prevail through this Iron Dome, then it's going to be down, I believe, down to the 200 weekly. Now, the 200 weekly at that point may not be at 57.8. In fact, it's most likely will not be. It'll probably be in the 60s somewhere by then, because all the while these two moving averages are converging and getting more and more towards the Iron Cross, of creating an Iron Cross. Meanwhile, the ubiquitous 200 simple moving average weekly is moving up slowly and inexorably, moving up. And so this should be in the 60s by the time price action makes contact with it, but it will be after we get the Iron Cross. And again, the Iron Cross is when the 200 crosses beneath the 400 moving average. And so we're going to need a catalyst. We're going to need something to drive this kind of markdown. Now, indeed, perhaps we've already seen the UTAD number 3, but it's also possible that we could have one more hurrah up to here, up to the outer band, like we saw here, this upper deviation number 2. Sometimes the last liquidity sweep, which amounts to the final UTAD, is able to go through the 200 and actually touch the 400. This could still happen, but we need something to drive that sort of FOMO and subsequent sell-off, which would be a liquidity drive as smart money exits, kind of like what it did 4 years ago, as we see here. Now, something that could catalyze this is the current news. This is dated July 20th. This is today, all right, 2026. Fed to inject 8.3 billion in liquidity. Okay, so that's the news, that's the rumor. So, with herd mentality, if it seems too good to be true, it is. It's going to be. It's going to ultimately be used against the herd to trap the herd and to slaughter the herd. So everyone and their grandmother is reading this. All the people who are not on the inside of the club are reading this. This is what they let out in the news. This is what they allow to be published. And so everyone is reading this, and everyone with half a brain is thinking, okay, 8.3 billion in liquidity. This is bullish. This is mega bullish. And so this could very well fuel the herd to create this sort of last UTAD. If we haven't seen it already, then this could well nigh catalyze such a movement. And so, more liquidity, good for crypto. Of course, they want to put this out there, and everyone's going to read this and be like, it's good for crypto. But we see that the herd mentality, it's often the very opposite. The market makers do the opposite of what mainstream is anticipating. So, but for short term, this could catalyze a UTAD to here, up to here, and this could drive this. But ultimately, there's a battery of shorts awaiting. the exit liquidity. It's going to gobble up the exit liquidity. Remember that smart money has already exited. Smart money has already exited. They've already had pre-designated shorts in place. So if this does effectuate this Fed injection of $8.3 billion in liquidity, if this does spur unsuspecting retail to buy into crypto, then it can only take it so high. I don't believe we're going to go through the Iron Dome. Currently, the upper dome is at 105.6, and so that would be the peak. That would be Pike's Peak. That would be the Mount Everest of the UTAD. And then from there, it's going to get mowed down with the howitzers of the short sales, of the institutional investors, the big boys, the hedge fund, the market makers, the composite operators are going to hedge it, are going to blow it down to smithereens, and then that could very well be the straw that broke the camel's back. That's the nuclear bomb that's going to send the price down to the inevitable rendezvous with the 200 weekly, where at that point it should be closer to $60,000. So anyway, that's what I'm looking at. If you get anything out of this sort of technical analysis, like, subscribe. I'm going to let you go. I'm trying to truncate these videos. I go on way too long, and I've already got all the information out that I needed to. Like, subscribe. May God bless you. Have a very, very safe week. If you're into trading and you want to learn how to kind of read more of this, kind of the way I do it, sort of like picking up the daily newspaper. You kind of everything. There's a story behind every wave and every trajectory. If you read it the right way, if you know how to read it with price action and volume, you can kind of get an idea of the sentiment of the market maker, which is what really Wyckoff is. We try to swim, we try to walk in tandem with the market maker, with the composite operator, and do what they do. And so when they sell, we sell. When they buy, they buy. We can't beat them, so we join them. If that's something that interests you and you're tired of buying the tops and selling the bottoms, then you owe it to yourself to check it out. I keep our Discord extremely affordable, and once altcoin season picks up, that's where I post my swing charts. I make on average anywhere between 30 and 40% on each swing. And it's going off basically the same principle as these videos: Wyckoff with volume spread analysis and pattern recognition, fractal range analysis, and so on and so forth. And that's enough for me. God richly bless you in Jesus' name. We'll talk to you soon. None of what you said or seen or heard in here, none of what I said is financial advice, but you already knew that. All right, I'm out. Adios. Bye-bye.